Welcome back, friends. Extreme volatility in the stock markets is for the time being behind us in the wake of a good interest by both United States and China to meet on the negotiating table and try to work out a good tariff agreement. Friends, as you know, stocks have bounced sharply off their spring lows following Donald Trump's Liberation Day tariff announcement. And it is possible that the worst may be over, but I don't think it is completely done with as yet. The volatility is going to continue, friends, but I think the extreme volatility may be a bit behind for the time being. Behind and between the range bound price action, lack of clear direction from the Fed, and headline fatigue out of Washington, investors might be better off going and enjoying their summer. And to what extent this can be true, friends, this summer, possible that volatility may for just a couple of weeks be a little muted before they hit ticker tape once again. Since hitting its April low, the benchmark S&P 500 has climbed roughly 20%, led by a swift rebound in beaten down sectors like XLC, the communication services, the consumer discretionary XLY, and technology XLK. So markets may stay quiet for just a week or so before new action begins to emanate. Treasury yields, a top concern in the recent weeks, have remained largely range bound between 4 and 5% despite the ongoing noise emanating out of Washington. So enjoy the summer. There's not really anything that's going to get excited in the next week or so, other than efforts being made to crack down a good deal on the tariff front between the United States and China, talks beginning on Tuesday in London. So, yet I would say that plenty of events over the summer can come, and some of them can even come and rattle the markets. As to whether I'm just talking in the open or whether we have some scientific evidence of which events can. Yes, we do. We know which ones will. But let me just recapitulate which are the important events. So we have the Federal Reserve's Jackson Hole Symposium in the month of August and a crucial tariff deadline in early July. Right up to the upcoming Fed meetings shaping rate cut expectations and the progress of Trump's big, beautiful bill through the Senate. But so far, traditional market drivers like earnings, economic data, and Fed policy are taking a backseat to politics. It's a fascinating market environment. You can almost say it's a lull before the storm, but yeah, there could be a little lull because earnings season almost over and the political season is beginning to get furious. Friends, this is the time when I believe that you see also inflation data coming in to the forefront. CPI and PPI numbers to be announced this week. First effects of tariffs will begin to appear, but I believe that's not over. More effects will come in the next CPI, PPI, and those numbers probably will be more important than these numbers which are coming in this week. All in all, it promises to be an exciting summer. You can be away for a holiday for just a few days or a few weeks, but you stay back. A lot of action and a lot of impact on the markets is round the corner. Summer promises to be an exciting one in the United States in 2025, and the effects of this will be reverberated across the world. So you will see the world financial markets also begin to see the heat of the excitement in the United States. To get to know more where the markets are headed, do join our Prime Plus Telegram group, which I addressed for the US and the FTSE markets. And for the Indian markets, you can join Premium Plus, which gives you 10 to 12 days predictions of the market, Indian market in advance, plus good multi-bagger recommendations. For the US markets, you can WhatsApp us 732-732-2720 for the Indian markets. You can WhatsApp us on 982-086-1044. Happy investing. Have a great week ahead. Take care. Bye-bye.